Hi and welcome back to my daily analysis videos with me, Richard Perry, market analyst at Hantec, on Tuesday the 22nd of December. Now moving on to this gold chart, and so many of our major markets today seem to be at key crossroads. They've had a lot of volatility in the last 24 hours and gold is no exception. A $60 trading range in the past, well, certainly in yesterday's session there was a $60 one-day session of range low to high. But it's fallen over, and I spoke about holding on to the breakout above 1875 as being important, and it's fallen back underneath that in the last 24 hours and is now sort of threatening a little bit of a topping area. If you look on the 4-hour chart, you can see here that this, zoom out a bit better, see that the breaking underneath the 1875 breakout support is not all that positive now, is it? And you can see here through the momentum, it's just now falling away. Is it going to be putting pressure on this uptrend now? That uptrend comes in around 1855, which interestingly enough is around about where the spike low came in as support yesterday. And it's starting to look a little bit less positive. The hourly chart even gives greater detail to this sort of prospective top pattern that is forming and the falling away of the momentum. So this recovery that we've seen in the gold chart in the past few weeks has started to falter and is looking far less secure than it was. And it's interesting that this RSI hit sort of 58 and 60 has been tending to see the limit of the recoveries, and that leaves me a little bit concerned as to how much further this move can go if this is a bull failure now, and how that uptrend is treated in the coming days. 1855 area at the moment, that comes in around 1858 tomorrow. So just be careful as to how this one reacts, because obviously 3 negative candles in a row, if we were to close here, starts to look as though that this recovery is losing its way. And as I said, continued closing underneath 1875 just starts to lose some of the improvement that we have seen in recent weeks on this gold chart. So it seems to be at a really important stage, this gold chart, and how the market responds. Obviously weaker dollar tends to be gold positive, so we are looking out for the dollar weakness to resume at some stage, but also how the market responds obviously to the COVID situation, how it responds to Brexit, 2 key factors there. So a lot of competing factors as to how gold is going to be driven in the coming days and weeks. And I think it's going to be, we're in for some extended volatility times in gold in the coming weeks. And how the market responds is going to be really interesting. But continued closing underneath 1875 leads to a bit of a failure of that move. And as I said, I think we need to move above $1,900 to really suggest that the market is sort of going with this as a recovery. So with that in mind, I wish you good luck in your trading today. Click here to subscribe to our analysis videos, go to our website to sign up for our webinars, and click to watch Trader Talks, our videos that give you top trading ideas.